Yes, I think that's true, and what we've seen over the past few years is domestic subscriber growth slowing. So for Netflix, a lot of their growth is coming from international. In fact, a significant portion of it is coming from international markets, and I think that's something we're going to continue to see. In terms of the competition, Disney, NBC are all launching their own streaming platforms over the next year, and that will add to competition in the domestic market. But as you say, they're spending a lot of money on content investments as a way to drive subscriber growth.
Are these companies turning into OEMs? Bear with me. I mean, you can't make the comparison between auto manufacturers and Netflix until you get to the point with this. The subscriber growth is fantastic. I mean, the revenues are fantastic, unambiguous. I like the products as well. Mrs. Sedgwick has specialised in the product. We use all of them. So, but operating margins going to 5.2% from 7.5%. So we've got fantastic revenue growth. We've got fantastic acquisition of customers as well. But in order to keep those customers, as we know, we have to keep them excited. We have to have more bird boxes, we have to have more roamers and what have you, which is a brilliant film, I'm told, as well. Even though it sounds like utterly miserable about Mexico in the 70s and a domestic cleaner. But I'll go with it. I'm going to watch it. But the fact of the matter is, the margins are being slived. How do they expand those margins if they're going to continually have to spend such vast amount of money on customer acquisition?
Well, I think we've seen marketing spend and content spend go up, and that is something we'll continue to see, I think, for the next few years. But it does make them less reliant on second programming from Disney and from NBC. And then going forward, we've seen it in the US already, they are doing incremental price increases as well. So we're seeing 13% to 18% increases over the next year in the US and some Latin America countries. And this, I think, is how they're going to continue to do that. They'll expand that into international markets again, like they've done before, and that is, I think, how they're going to grow their revenue going forward.
Do you think they've got a sufficient moat to keep the pretenders to the crown, like Apple's new streaming service and NBC's new streaming service, which will come, I think, later this year or early next year? Do they have a sufficient moat to prevent these new entrants eroding margin and revenue?
I think that's the thing about Netflix. They're continuing to build on that. In terms of what we're tracking in terms of commissioned titles coming up, they're commissioning around 250 new titles in the next 18 months alone. And that is over 100 more than its closest rival. So they're continuing to build on that and continuing to grow their library.
And what about the longer term opportunity or challenge here? I mean, they're clearly moving into international markets as a way to offset some potential domestic slowing. But is there a risk that people like Elizabeth, the under 35s, are just watching less and less television at the moment? I mean, the data seems pretty clear that they're just not tuning in.
There's a lot of data to show that there is fragmented viewing. That's definitely true, and I think continuing to invest in lots of content will be one of the ways to do that, but also the experience, the way we can consume content on different devices will help grow that subscriber base as well.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.